Hello everyone. In this video, we will discuss about what is Bitcoin and how does it work. Now let's start with Bitcoin. Bitcoin is a newest type of virtual currency that has made headline after headline over the last decade. Its underlying concepts and functions are simpler than you might think. Bitcoin at its core is a software protocol based on the blockchain. The digital token has a value based on what others are willing to pay for it or simply based on the concept of supply and demand. When it first came out, Bitcoin was worth about $0.0008. But as more people bought into the idea and bought the token, the price then climbed to over $65,000 in 2021. Bitcoin is a digital currency based on a decentralized system that records each transaction on a ledger, also known as blockchain. As its name suggests, Bitcoin is an electronic currency, but unlike government issued currencies, there is no single entity that issues Bitcoin or is in charge of processing its transactions. Before Bitcoin, it was not possible to make electronic payment without the help of a third party, like a bank or payment processor. Payments were often slow, expensive, and not available to everyone. To solve these problems, Bitcoin operates without a trusted third party. Instead, it works as a purely peer-to-peer electronic currency, meaning that payments are sent directly from one person to another. Now we will discuss about Bitcoin origin. Bitcoin is based on the ideas laid out in a 2008 white paper titled Bitcoin, a peer-to-peer electronic cash system. The author, going by the name Satoshi Nakamoto, wrote, "The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currency is full of breaches of that trust." The following year, the software described in that paper was finished and released publicly, launching the Bitcoin network on 9 January 2009. Now we will discuss about how does Bitcoin work. One of the most important elements of Bitcoin is the blockchain, which tracks who owns what, similar to how a bank tracks assets. What sets the Bitcoin blockchain apart from a bank's ledger is that it is decentralized, meaning anyone can view it and no single entity controls it. At its core, Bitcoin is a transparent ledger without a central authority. Specialized computers all over the world use mathematical functions to independently verify all the Bitcoin transactions which are there, then add to a public permanent list of transactions called the blockchain. The blockchain is stored on all of these computers and work as a secure universal record. Blocks in a blockchain are units that contain data about every transaction, including the data, time, value, buyer and seller. The number of bitcoins will never exceed 21 million, ensuring scarcity and finite supply. Now we will discuss about what is Bitcoin used for. Bitcoin is an alternative to fiat money. Well, for the first time since digital money came into existence, we now have an alternative to the current system. Bitcoin is a form of money that no government or bank can control. Bitcoin has several advantages over the current system. First, it gives you complete control over your money. No government or bank can decide to freeze your account and your holdings. Bitcoin also cuts a lot of middlemen from the process of transferring money. Bitcoin is cheaper to use than traditional wire transfers. Unlike fiat currency, Bitcoin was designed to be digital by nature. Today there are several merchants online and offline that accept Bitcoin. Electric car company Tesla has also gone back and forth in deciding to accept Bitcoin payments. As a form of investment, individuals can invest in Bitcoin to help diversify their portfolios. Now, why invest in Bitcoin? Bitcoin is a currency that has the largest market cap. Alone, Bitcoin has more than 65% of total market capitalization of all cryptocurrencies put together. You can easily trade Bitcoin for cash or assets like gold instantly with incredible low fees. The higher liquidity associated with Bitcoin makes it a great investment. Bitcoin is accessible to buy, sell and trade 24/7 in any part of the world. Crypto investors can access Bitcoin on many cryptocurrency exchanges. The main reason a traditional investor may want exposure to Bitcoin is to hedge against inflation. Bitcoin's volatility is a concern to many investors. However, volatility is expected to decrease forever as institutions and government enter the market with long-term interest. You need not to buy one Bitcoin. You can buy it in fractions. Now, where to buy Bitcoin? Bitcoin is available with almost all cryptocurrency exchanges. A cryptocurrency exchange will allow you to buy Bitcoin in exchange for other assets, including traditional currency or other digital currencies. The best cryptocurrency exchanges are secure, cost-effective, quick to set up, easy to use, and accept a variety of funding sources. Now, the best cryptocurrency exchanges to buy Bitcoin in 2022 are FTX, Gemini, Coinbase, Kraken, Binance, and KuCoin. The steps to buying Bitcoin: first, you have to open an account with a cryptocurrency exchange. Then you have to connect your bank account and deposit funds into your exchange wallet. Buy Bitcoin. Next is store your Bitcoin in hardware or software wallet. Now we will discuss about the risk of investing in Bitcoin. Volatility first. Investing in Bitcoin can be challenging for some because of the large fluctuation in its price. The volatility of Bitcoin is far greater than that of stocks. This makes Bitcoin a riskier asset. Now the next is regulatory risk. The lack of uniform regulations about Bitcoin raises questions over its longevity, liquidity, and universality. Next is cyber attacks. Cyber attacks are another risk that Bitcoin faces. Hackers target cryptocurrency exchanges where billions of dollars of market cap have been lost in cryptocurrency market due to hacking. Individuals can also get hacked if they give out sensitive information such as private keys. Now there is one word of caution I want to give you. As with an investment, make sure you consider your investment goals and financial situation before investing in any cryptocurrency. Cryptocurrencies can be extremely volatile and it's still a very speculative investment. You should invest carefully with caution. This is the end of our video. If you want to know more about cryptocurrency, you can visit our website cryptoknowlogy.com. Link in description. Thanks for watching. Kindly subscribe our channel.